What is going on? All right, so we got the recording going. I think we should be good. All right, but I didn't hear her say record, so I think we should be good. But anyways, though, let's go ahead and get started. So, first things first, we're gonna be tapping into the harmonic scanner to see if there's anything that we might like. What's that? ADNZD? No. Do. Oh man, that just fell out the sky. I didn't even see that. Okay. Yeah, I don't think we have anything on the scanner. That's cool. That's cool, bro. Okay. Do away with that. See if the DeLorean's called out anything recently. It is 1:15 Central. So let's see. Nothing appealing as of right now. All right, but no, I did not mean to take that off. My bad. Got my boy Robert on the call. My boy Robert is out of this world, literally. I see you, my brother. Shout out to the aliens and the Martians for me while you're out there. All right, cool. So we're about to go ahead and get into the charts since I don't necessarily see anything on the scanners. Let me get y'all to drop some twos in the chat if y'all are ready to dive in. Okay. Let me get y'all to drop some twos in the chat if y'all are ready to dive. I see my boy Robert ready, right? I bet. Okay, cool. Let's go ahead and get to it. Right now, the thing I want to be able to talk about is the two trade ideas I currently have running. As you can see, are both pretty in deep profit. And we're gonna go over both of these trade ideas. Obviously, both of these trade ideas you would have had access to, assuming. Pay attention to the goddamn Telegram chat. You feel me? Okay, where do I want to start? I guess we'll start off on let's start off on NTD Shop. NTD Shop was a sniper entry. All right, so we're gonna go over this how we usually do. As you guys know, I like to usually be able to pull up a different data feed so that I don't have to mess with the markup that I already have. All right, cool. So first things first, let me go ahead and go into a spiel for y'all, right? First things first, whenever I look at my charts, right, I like to be able to focus on the 1 hour time frame, okay? So the 1 hour time frame is going to be the time frame that, I love to be able to use because that's going to be able to help me see the market most clear, right? That's how I can form my directional bias and so on and so forth. Give me 1 second. My directional bias and things like that. So basically, what I use the 1 hour time frame for is initially what I want to be able to discover is the overall trend of the market, right? As well as the directional bias. Okay. So the first thing we're about to look for is the overall trend of the market. Okay. It's pretty self-explanatory on this setup. The overall trend in this market is clearly going to be a downtrend. Don't have to really think too much about it. Don't have to, really go too deep into it. Anybody that understands, simple up and down movement can clearly see that this is a very, very aggressive downtrend. Okay. Very aggressive. Now, the other thing that we can see is going to be this, right? We have a little bit of trend line, what they call trend line liquidity. Okay. Which basically means, it's two kind of people. You have the people that are looking to trade off of this trend line, which I'm not going to necessarily say that's a bad thing. But then you have the other people like myself. You're looking at this trend line as a potential area to be broken. And you're looking to get in the move to break that trend line, okay? So this is another confirmation, right? So first thing we confirmed is this is clearly a downtrend. The next thing I want to confirm is what is going to be my personal directional bias. Okay. Now, whenever I speak on my directional bias, it doesn't always have to necessarily go with the trend. Obviously, you guys already know if you're in the trade idea, you've seen it. This is clearly a counter trend trade. Okay. Against the trend, that's my directional bias. Why did I come across that though? Let's go ahead and dive into it. So, as you guys get on these calls more, you're going to see literally, as I tell y'all time and time again, the biggest difference in my trading came from whenever my setup started looking similar versus looking different from one setup to the next setup. So if you guys really pay attention to these calls and my markups, everything for the most part looks pretty uniform, right? Pretty similar. So you guys know whenever I come to the RSI, there's two things I like to look for. I like to look for exhaustion and divergence, okay? Now, whenever I reference exhaustion, what do I mean by that? I like to be able to focus on when this white line comes outside of this purple box, right? If it comes out to the upside, that means that the upside momentum is getting weak. If it comes out to the downside, that means the downside momentum is getting weak, okay? So notice how this initial area right here on this drop was showing weakness, right? It came outside the purple box, but what did the market kept doing? It kept dropping, okay? So it doesn't mean as soon as you see this, you just randomly hop in for a buy or try to take a counter trend trade. That's not what you do, okay? You want to start gathering more data. So the market is showing you that it is getting weaker, but it doesn't mean that it's going to stop dropping. The word weak in this instance is relative because it looks like it's still very aggressively dropping, right? But that's why we're being patient. Now, the next instance that we saw the market show some type of weakness, it's now, slowing down. Notice that we did not have another aggressive move like this throughout this entire transition. So this is definitely going to be one of the main emphases that I want to be able to focus on. Okay. Now from here, what we can look for is the next one, right? The next step, which is divergence. Easiest way to detect divergence is I recommend you guys take it from the candle chart to the line chart, okay? How do you detect divergence, right? If you can see that your indicator or your chart are doing two completely different things, right? That is divergence. So notice how on the chart, the market is trending down, okay? Or if you just want to do it like this right here, the market is clearly trending down, okay? If I were to take a vertical line, line it up for you guys right here, you guys can see in the instance that the market is trending down, the RSI or the indicator that you're utilizing to detect the divergence is clearly trending up, right? This is trending down. This is clearly trending up, okay? And y'all already know what divergence does on a lot of these setups that I call out. This is really one of the, the key points that gives us, those big swing moves, right? So I figured out the trend of the market, my directional bias. Do we have weakness in the momentum or the trend? And do we have divergence? All of my confirmations are here. This is literally all I look for, right? Now, the next thing, we're going to get a little more technical, okay? So I ended up entering off of the 2 hour. So we're going to bring this back like this right here. All right, so this is what the market looked at about the time I sent out the setup, right? Give or take, or I was looking at the setup. I sent it out as it got closer. So if we're focusing on this area, okay, we want to now be able to look for any opportunities that look like a possible entry. Now, you guys know I like to be able to look for institutional or engulfing candles. So from the 1 hour time frame, I know for the most part, like this imbalance in price is probably where I would like to see, right? Some type of retracement to. So if I go to the 2 hour, I can identify this 2 hour candle that we have right here, okay? Now, this 2 hour candle is now what I am focusing on. So if I were to go through other time frames, you can see, the 3 hour, the 4 hour, they all have candles, right? Engulfing or institutional candles, whatever you may refer to it as. You also got this 7 hour. So, one of the things that you can use for an additional confirmation, notice how this candle is basically on multiple time frames, right? They all look slightly different, but they're all basically throughout all the time frames. So that's going to be a stronger confirmation, right? That's a pretty strong candle if you have it on 7 hour, 8 hour, 5 hour, 3 hour, 4 hour. Like you got this on so many different time frames. So I would consider this a very, very strong zone. Okay. So, in a nutshell, what you could be looking for is something like this, right? Look for the market to come back down to that zone, get your rejection. Okay. But we're going to get way more refined than that, right? So from this 2 hour candle, y'all know what I like to do, right? I like to be able to look for the biggest candle in the highest time frame. This 2 hour honestly was good enough for me. So from this 2 hour, y'all know I like to what? I like to start off by taking the 50% of that candle. Okay. So if I were to just initially look at the 50% of that candle, we'd be looking at somewhere like this right here. Now, y'all know I don't usually just enter straight off the 50% just because, sometimes the market doesn't always give us that deep of a retracement. Okay. So what I like to do now is I want to be able to draw a zone. Okay. So I'm going to draw a zone from the opening of this candle to the 50%. This can be like a specific zone we can be looking to enter off of. Okay. Now, you guys know I like to set pending orders, buy limit, sell limit. You can't set a pending order based off of a zone. You have to have an exact level. Okay. So for me, how do I get that level? Once again, I'm going to pull out the fib. Okay. The Fibonacci retracement has made all the difference in the world on my entry technique. Just got to be honest with you. Okay. So if I'm taking the fib from the high to the low, what do I always tell y'all? I want to be able to utilize a fib level that matches up in my entry zone. And if you don't see it, I'm going to let you know the 88.6 is going to be the deepest possible level of retracement, meaning it's going to give you the smallest stop loss and the biggest risk to reward. Right now, I don't know what I was doing. I think I had something to do. I was rushing. I ended up putting my entry at the opening, even though this is not, it's not like it's a big ass difference, especially on a slow pair like this. Like, yeah, it's literally like a pip difference. So it doesn't actually matter that much, but on other setups, it could have made a bigger difference, but I don't remember what I was doing. I just know I put it at the opening. I didn't actually put it at this fib level, but this is where the entry should have been. Okay. So the concept of it is what you would now like to see is a market give you that retracement. I mean, look at that, right? You see how pinpoint of an entry we got on that setup, right? Look at this. You can't get any better than this right here. Okay. Now, some of you might be thinking about, okay, well, how did you know that this wasn't the candle that you want to look for? Okay. Now, the thing you have to start thinking about is whenever the candles start showing you a willingness to go in the direction you're looking for, you have to see, does it even make sense for them to come back to certain areas? So to be honest with you, it didn't really make sense for the market to come back down here. Why do I say that? Because we technically already had the market reject off of this candle. So whenever I saw this 2 hour candle get created and I saw these wicks, knowing that this 1 hour had already been tested, okay, it didn't really make sense for the market to break below this candle just to touch this if it wanted to go. I felt like with all the imbalance in here and the inefficiency, this should be a good enough candle to where we shouldn't have to go below this area, which is why I felt comfortable, placing my risk below this candle versus below this candle. Okay. So as you see, we are currently up. I mean, we only had an 11 pip stop on this. The first TP is disgusting. 38 pips. To be real, I mean, it depends on the trader. Some people will be taking partials and all that type of stuff. One thing I learned personally is I'm holding for the that high or that low. Like if this is a valid move, because we got a good amount of space, if this is a valid move, it's gonna break this high, right? We got a break of structure over here to the left with this wick. We got liquidity sweep to finish off the week. This was a previous weekly low. So this looks like it should keep going, right? Now we are up a 3.5 to 1. Okay. So it depends on you. If you want to take partial, whatever you want to do, you manage your trade how you want to do. We are up at 3.5 to 1. My first target is about a 4.6 to 1. I'm still holding. I'm at break even. I'm okay with whatever happens, right? But I'm confident enough to hold my trade and not take partials until it actually hits my targets just based off of back testing, okay? I'm confident to be able to now hold my trades longer than what I usually would from back testing. So what I feel like is Whenever you have that last high or last low, the market should break that area if it is going to be valid. So I feel comfortable literally holding it until it breaks that high. If not, it's just going to hit my break even, and that's just going to be what it's going to be. Okay. So as of right now, guys, we are still holding. Like I said, if you want to take partials, you can do whatever you want to. When I actually take partials, it's going to be whenever take profit one gets hit. But I am at break even, so I can't lose in this trade at this point, right? You know, we have more liquidity up here. We have a lot of imbalance here. So it makes a lot of sense for this, you know, to keep going higher. So that's what I'm looking for in NZD Chef, right? Give me 1 second to respond to this text. This will be a fairly short call, just because, like, for instance, John Dollar and them don't go live tonight. They go live tomorrow. All these other setups that I have aren't going to happen tonight, so I'm not going to necessarily waste my time talking about. I will talk about USD Chef for a little bit. I think USD Chef is going to be the setup of the week, so y'all definitely keep your eyes peeled for that. I think this is going to be a beauty. So we'll go over that for a little bit. Give me 1 second to respond to this text message. All right, bet. So let me check the chat real quick. Yeah, love the engulfing candle. Shout out to the engulfing candle for sure. So we just went over NZD Chef. Now the dope thing about this is, you know, NZD is going up, GBP NZD is going down, right? So that's a nice little correlation, kind of taking trades in the opposite direction. Both of these actually do have potential to, I mean, look at all this space. This has to drop, right? Look at all the space. This has to rise. So both of these could be absolute bangers. I mean, they're already bangers. They're both pretty deep in profit, but, you know, want to be able to see them continue going. Let me remove this. All right, bet. Let's go over GN real quick. Let's see. GBP NZD. All right, so GBP NZD, right? Now let's go over the same concept, right? So you guys know, once again, I want to see if anybody can name the 4 confirmations that I just went over, okay? Can anybody name, let me see if y'all are paying attention. So in the chat, maybe I can't name all 4. Let me get y'all to drop in the chat. I have 4 primary confirmations, okay? Do y'all know what any of those are? Let me see if y'all, let me get some participation in the chat. What are some of my confirmations, right? On a 1 hour, I say I like to look for this. I like to look for that. I like to look for this. And I like to look for that. Okay, Gabby got one of them. Divergence. We got fib levels. Okay. Cool, cool, cool. All right, I see y'all. Exhaustion, institutional candles. Okay. Oh, y'all not playing. Okay. Okay, okay. So that's perfect, right? Now we're gonna do the exact same thing. Now I'm gonna teach y'all something. One of my favorite, right? I'm gonna be honest, okay? One of the things I personally found out in my trading journey that I'm just not good at, I'm not really good at lower time frame setups, okay? So if any of y'all ever wondering, Tyree be sending out some big ass time frames. That's because that's what works for me, right? I was getting destroyed on the 15-minute, 10-minute, 5-minute, anything with a minute on it. I was getting my ass handed to me. So I had to be like, you know what, Tyree, this doesn't work for you, bro. What works for you is a higher time frame. Now, I'm saying all that to say, the only time you guys will ever see me send out a lower time frame setup is going to be based off of what I'm about to explain right now. This right here, okay? If you guys don't know, this is called a manipulation wick, okay? If y'all are taking notes, I could definitely take notes. This is called a manipulation wick, okay? The concept of a manipulation wick is, I learned this from Starboy, right? Whenever you have a manipulation wick, the goal of it, okay, is you want to be able to drop down time frames until you can find more candle body than wick. Okay. So before I get into all that, right, the overall trend of the market is obviously bullish. Like it's no ifs, ands, or buts about it. So, anything except buys, you could be getting hurt in this uptrend. Okay. Anytime you try to look for a sell, maybe just look for a scalp. Obviously, none of these are swing trades to the downside. Maybe this will be, but as of right now, the market is just going up. So what is my directional bias? It is going to be obviously a sell, just because you already know the setup that I called out. Let's go ahead and look at the RSI. So once again, what do we see? Right? A lot of exhaustion up here, right? Exhaustion here, but the market is still going. Exhaustion here, but the market is still going. A lot of exhaustion, right? Now, remember, the exhaustion is giving you signs and hints that the market might be getting ready to drop. It just ain't finna do it right now. You want to know whenever you have the ultimate confirmation that the market is probably about to drop? Whenever you get some goddamn divergence. Holy smokes, right? And shit, I could literally name an educator that's taught me all the individual things I learned, right? Shout out to Mannequin Jonas. Mannequin Jonas is really who I really learned divergence a lot from. Like he uses divergence like a lot. So shout out to that boy Manny Q, harmonic goat, right? And educator that isn't even on the platform anymore named Mauricio. I don't know if any of y'all remember Mauricio from SETI. Mauricio is the reason why I use the fib levels for my entry. He's like one of the only, because most institutional traders don't like specifically use fib levels for an entry. He was like the first person who I saw did it. He more so focuses exclusively on like 71, 78, 6. That's like his primary entries. But like the logic of him doing that, I'm like, damn, that makes it a lot easier to find an entry versus me kind of just like either doing the opening or the 50%. It can give me like a more specific area. And then Starboard is how I figured out about, the manipulation wick, right? So I kind of went through it real quick as far as like, the bias, because I really want to focus on like the manipulation wick. But the concept of it is, we know it's an uptrend. Okay, my directional bias is going to be counter trend. All right. We do have divergence, right? Market is going up, same time the market is going down. We do also have exhaustion. Now, let's go ahead and get into the good stuff, right? I can show you a couple examples of manipulation wick. I ain't gonna take too much time on it. We're not gonna talk about USD Sheps tonight. Like I said, I usually like to I'll just drop this in the chat. But like I tell you, I don't like talking about setups if I'm not gonna call it out, because that could just give us something to talk about on the next call. So y'all can see this. It's pretty straightforward. Any of y'all that see what's going on, I just think that this is gonna be a good trade. So I'm gonna just drop this in the chat real quick. Obviously I'm gonna call it out if it happens. I don't think it'll happen tonight. Probably be like a midweek reversal type joint, but that looks beautiful. Anyway, so going back to GN, okay. So where is, all right. So what we're gonna focus on today is gonna be the manipulation wick. Okay. What the hell is a manipulation wick? A lot of times for me, in my personal opinion, I usually find the best manipulation wicks on the 1 hour and the 4 hour, like exclusively, right? 1 hour and 4 hour. A lot of times the 1 hour is going to give you the really good one. Okay. So you'll have to train your eye to it like anything else. But if you guys notice, you don't really see a big wick. I mean, shit, this right here, this is a manipulation wick, right? You see how the market basically reacted off of this wick and it kept dropping. It didn't come back and break this high. If I were to drop down enough time frames, I could probably find a nice big body candle on this. Okay. So this is a similar concept, right? But we're focusing on this as of right now. Okay. So the goal of it is, whenever you see a quote unquote manipulation wick, you want to see that it took out the most recent high or the most recent low. All right. That's how I consider them to be valid. The most recent high or the most recent low. Notice how this is the most recent high. It took it out before it ended up closing lower. If I go back to this other one, let's see if this one did something similar, right? So it didn't take out as many highs as I like. I'd probably like it to have taken out like this, but obviously it was valid enough. So something like this, right? It took out this high, barely peaked above it before it ended up closing lower. That's kind of like the concept you want to be able to focus on. So notice, right, this will not be considered a break of structure. You have to know the difference between a break of structure and a liquidity sweep. It may look the same if you don't really know what you're actually looking for, but you have to understand they're two different things. You can easily confuse a break of structure for a liquidity sweep and vice versa. This will not be considered a break of structure to me. This would be a liquidity sweep just by how the wick dipped above this high and then closed right below. I can actually use my little cheating tool to see how significant this high was. So if you guys don't know, shout out to this indicator. I spoke on this before. This orange line is going to represent a previous weekly high. So this is what I'm looking at, right? This move, right, took out this previous weekly high right here. There's a lot of orders trapped in this weekly high, okay? On top of that, the market wasn't done. So the market didn't even feel like this was the last move. They wanted to be able to come and take out this high. So this entire area is very, very, full of orders, right? Full of a lot of orders. You got this previous weekly, which is a very strong indication, so all of this makes sense as far as like the market grabbing liquidity. On top of that, whether or not a lot of y'all look at this or pay attention to this, these are like M's and W's, right? These are M's and W's, right? If I go back and look at NZD Chef, this is a W. You feel me? All of it is not going to be, like maybe like the perfect pinpoint, but the concept of it is this is basically a W for a buy. This will basically be an M for a sell. Now, the way that you're able to trade off of the manipulation wick, I learned this from Starboy. Shout out to Starboy from Steady. You want to be able to drop down time frames until you can find more body than wick. I'm gonna repeat it one more time. You want to drop down time frames until you can find more body than wick. So 55, okay. We see we got a body, right? Notice how I literally went from the 1 hour to the 55 and you instantly see an institutional candle. We're not done yet, right? 50, the best looking one was on the 45, okay? So this is now going to be the candle that we are now going to be focusing on, right? Now, the thing that I like is that the market ended up, I ain't gonna go over mitigation, ended up mitigating, below this candle, broke this structure, and now we are looking for a retracement, right, back into this area to give us that drop, okay? So as usual, I'm gonna show you guys how I finesse entries, okay? Because like I said, I've done a lot of back testing, so I had to figure out sometimes everything's not gonna work out how I wanted to. So in this example, right, I'm gonna start off by looking for the 50%, okay, like so. I'm gonna also draw an entry zone, like so, right? Also, what am I gonna do? I'm finally gonna take out my fib from the high to the low. I'm gonna look for an entry. Now, I'm gonna show you guys, like I said, how I finesse it, because y'all know my max stop loss is gonna be 40 pips. I'm comfortable with that, right? Comfortable with 40 pips. But I'm not gonna go past 40 pips unless I'm trading like, something non-Forex like gold or some shit like that. So peep game, right? If you guys know me, I usually like to take my entry based off of the fib level lining up in my entry zone. So normally, this would basically be my entry, okay? Right? The 61.8 falls within my entry zone, which is the opening to the 50%. That would be my entry. But look at my stop loss. It's too big, okay? It's too big. So what I usually do is I'm going to then start working my way up to the next fib level, okay? Does it put me in the 40 pip range? Not quite. So what am I going to do again? Work it up to the next fib level. Y'all see how easy I make this for myself, right? Now I have an entry. That simple. Drop a 1 in the chat if that made sense. If my stop loss is bigger than my 40 pip threshold, I'm just going to keep moving my entry up to a fib level until it fits within my threshold. It's that simple, right? It's that simple. Each one of these is an entry, right? It's a very specific area in the market based off of mathematics and a whole bunch of stuff that we probably could never understand, okay? But what I understand is each one of these fib levels can be a specific entry, right? So I literally started from the 61.8, which would be ideal if the stop loss were normally within my range, but it wasn't. So I went to the 71, still wasn't ideal. Then I went to the 78.6. Now we fit. Okay. Obviously, I added the 2 pips of spread, which actually made it exactly 40 pips. And if I come back to this, okay, you guys see what happened. Now, it actually benefited us in this setup because the market kept going higher. And if we would have actually entered down here, it would have been we still weren't, you know, some good drawdown. But I'm one of the people to where, you know, please understand, every trade is not going to be like NZD chefs where you have like a sniper entry, quote unquote. You're going to have some trades like this where it gets a little ugly. It's a part of the game, okay? It's a part of the game. The only thing that matters is, did it hit your stop loss? No. All right. And at the end of the day, the market ended up dropping. And as we sit now, we are what? Shit, 85, damn near 90 pips in profit. TP1 is like, I think it's like 130 pips. Something like that. Yeah, like 135 pips, right? That's just first TP. We still got other levels, right? But yeah, I mean, this is pretty much kind of like the concept that I want you guys to be able to understand, that it is not that difficult. If y'all notice, every time I take a setup, I'm going over the same steps. Direction, no, trend, directional bias, momentum weakness, and divergence. From that point, I'm looking for an entry. What is my entry always going to be? An institutional and or engulfing candle, okay? Now, the concept of targets, I feel like sometime this week, I'm going to take out time to go over targets and stuff like that, because I think one of the best things for me is I've been able to define targets really well to where I have the confidence to hold a trade, right? Because I'll be real with you. This setup is currently up like 3.5 to 1. Most people would have already taken partials, and you're not wrong for that, right? But for me, I feel confident that if I'm in a move and a move is actually a good move, it should break that previous high or previous low. So I'm willing to hold it for that previous high or previous low until I take anything off the table. Yeah, I do put myself into situations where I'm up deep profit. Maybe it reverses all the way back, hits my break even, and I don't make anything. But guess what? I'm okay with that. You might not be okay with that. That's why everybody has their own emotional complex of how they want to trade. But this is what works for me. Trend, directional bias, momentum, and divergence. So that's the things I look for. Trend, my personal directional bias, which can go against the trend, as you guys have seen in both of these examples. We've technically taken counter trend trades, right? Even though we did have breaks of structure, it's still technically a counter trend trade overall. Yeah, momentum and then divergence. The divergence is GOAT, like I'm telling y'all. The divergence is GOAT. So like for instance, if you guys look at this, right? So off this 45, I mean, shit, I could take it from all the way up here, right? Peep this. The market is sloping down, right? I do it in the same instance from here to here. The market is clearly sloping up. That's divergence. Like, divergence is a part of the vast majority of the winning setups I call out. You're gonna have some sort of divergence. Like, I can't even help it. You know what I'm saying? It's just there. It's so beautiful. Shout out to Mannequin Yona. It's like, I don't know where I would be without divergence. You feel me? But outside of that, guys, that's pretty much it for the call today. So as I said, you know, we will pick back up tomorrow. And we do have more setups for the week. So definitely, if y'all did not get a chance to take advantage of the 2 setups I'm currently talking about, you know, obviously just make sure y'all are tapping into the chat. And you know, more setups will be called out. But in the meantime, we gonna rock out with these 2. We gonna let these do what they do. And we gonna see if they end up hitting take profits tonight. But with that being said, I appreciate everybody for being on the call. As always, this is recorded. I know I've been slacking on YouTube the past week, but we're gonna make sure we get back on. I'm actually go stay up all night so I can get back into the groove of things and get my schedule back up place. So I'm gonna make sure I get everything back in order because I know y'all like tapping into the new videos and stuff like that. But as usual, I'm gonna see y'all tomorrow at the same time, 1 a.m. Central, 2 a.m. Eastern. Don't do anything tonight in the markets that I wouldn't do. Okay. And what I wouldn't do is over leverage. You feel me? Make sure you are risking your proper percentage. All right. And if you don't know how to determine the lot size or how much money you're supposed to be risking, please tap into my YouTube channel. All right. With that being said, y'all have a good night. I'll see y'all tomorrow.